Hello everyone, welcome back to the channel. Today we're going to discuss about the general profitability ratios that basically govern the entire retail industry. So basically we're going to discuss about the gross profit margins, the operating profit margins and the net profit margins and how to calculate them very simply. Okay. As you can see in the image, we have taken a very basic income statement of a random company that basically showcases its revenue, fixed and variable expenses, and finally calculating the net profit out of it. So let's begin. Starting from the top, we see that the sales or the revenue of the company is showcasing as $1 million, and the cost of goods, that is basically the cost that is directly associated with the production of the goods, is $350,000. Now when we subtract the sales from the cost of goods sold, we get the gross profit. Now below the gross profit, you can see we have explained other expenses that are not directly associated with the production of the goods but obviously are incurred by a company. So those expenses can be marketing, staffing, supplies, your travel expenses, other rents, depreciations, etc. Right? All these come under variable expenses. Now when you subtract these variable expenses from the gross profit of the company, you get the operating profit. Now this operating profit is really important because this gives you a wholesome picture of how your operational profits are, because this basically covers all the major expenses, just separating the taxes and maybe few other fixed expenses that are not part of it, but this gives you a very logical idea of how your operations are working, right? Coming to the net profit, so net profit is actually the overall profit that has included all the costs, all the incomes and everything of the business. So this is basically the final picture that you get of how much you are in profit or loss, right? So basically you take your sales and subtract all the expenses, whether it's a cost of goods sold, your variable expenses and fixed expenses. Just subtract all of them and you finally get your net profit, right? Now talking about the net profit margins, gross profit margins and operating profit margins, let's look at the numbers. Now whenever you want to calculate the ratios or the margins, you simply have to take these profits and divide them by the total sales of the company, which in this case is $1 million, right? So for gross profit margin, your gross profit is $650,000 divided by 1 million, that gives you 65% of gross margin for the company. Similarly, for operating profit margin, you have your operating profit is 273,000 divided by 1 million, that gives you 27.3% of your operating profit margin. And obviously similarly the net profit margin is net profit, that's 144,950 divided by your sales, that's 1 million, so that gives you 14.5% of a net profit. You will notice that as you go down the line, your profit margins are decreasing because your expenses are increasing, right? So from gross to operating to net, you are adding more and more expenses to the equation. That's why your profits are decreasing, and that's why net profit gives you a perfect picture of how your operations are working, how your company is working in terms of the overall profits of the company and the percentage basically in which you are playing, right? To sum up the importance of these three profitability ratios, the gross margin basically tells you how much the company is profitable in sales, but simply taking account into the COGS, right? So it's the company's efficiency versus the production process. Operating margin is basically representing how much the company is capable to generate the profit through its core operations, right? So these core operations basically include the EBIT, that's earning before interest and taxes, right? and it also gives you a very good operational viewpoint of your company's performance. Net margin is basically considering all the aspects of your business, accounting for all the costs you have incurred, including the taxes, depreciations, fixed and variable expenses, everything, and thus gives you the final picture of your company's profits. I hope you have understood the topic quite well. Please like and subscribe. If you have any other confusions, please let me know in the comments, and in the following videos we'll try to resolve them. Thank you so much. Please take care. Bye.